So everyone, for those of you watching this hopefully subsequently, we have Jane Gann presenting this evening. Jane's a PhD candidate, University of Manchester. I'm going to be talking about a thesis on push payment fraud and how critical realism, amongst other interests, might inform her studies. So, Jane, without further ado, over to you.
Thank you, everyone. Thank you for joining the session. I appreciate authorized push payment fraud may not be very familiar to everyone. So in today's presentation, I will first start with kind of explaining what it is and also how I'm experimenting with using a critical realism and social positioning framework to assess and to understand the criminogenic risks associated with authorized push payment fraud. So the sort of general structure of today's presentation, first, to give everyone an overview of what authorized push payment fraud is and why we should care about this. And then I'll also go on to discuss how critical realism and social positioning theory can help us conceptualize and investigate authorized push payment fraud's criminogenic mechanisms. And just to understand what does social positioning theory even mean in real life, that I think can help us then link it back to authorized push payment fraud and the key research questions. And then finally, just some remarks on what I think are some of the limitations, which include my personal ontological commitments and some questioning around whether we are always entirely aware of what may be actually unknowable. So before I even launch into, authorized push payment fraud, etc., perhaps it's useful to tell everyone a little bit about me. I'm currently undertaking a PhD part-time at the University of Manchester, where I focus on sort of the structural mechanisms and the causes of authorized push payment fraud. But my day job and largely most of my professional career and experience has been in the financial services, particularly in banking. And the sort of motivation for the PhD project was actually originated from my banking work, where the bank I was working for started receiving a lot of communications from individuals, mostly pensioners, saying that they have made certain investments with the bank that I used to work for, and they're asking about where their money is. And I took a lot of these calls from very distressed pensioners, and it eventually transpired that many of them had been defrauded. So there were fraudsters misrepresenting themselves as the bank I was working for, and managed to convince these pensioners to invest their pension in non-existent investments. So some of the people I've spoken with had lost, tens of thousands, some of them hundreds of thousands of their pension in the scam. And as part of my experience of speaking with them, I had understood how vulnerable they were, and also how much they kind of tried to do the right thing. These weren't greedy people. The investments they were putting their monies in, had a very conservative return. They felt that they were putting their money with a reputable organization, but the scam was very sophisticated. So these fraudsters, sounded like they had call centers with people, using posh accents. They sent, the victims banking statements, etc., which were themselves also fraudulent. And in the process of assisting the victims, I contacted other banks. I tried to contact the police, And I just recognized at that time, there was really no support for victims at all. So like this lady here on this news article, she had transferred money to whom she thought was her solicitor. So her email was hacked. Um, she was in the process of purchasing a house, and she then sent money to bank details that were provided from who she thought was her solicitor, but it was actually the fraudster, and she paid the money away. Um, and so in an authorized push payment fraud, you would have a fraudster who, through acts of deception, whether it's an investment scam or an impersonation scam, manages to convince the victim to authorize a payment through the victim's bank account. And these funds are usually remitted via online banking through something called faster payments. And the clearance of these payments is instantaneous and not reversible. Once the fraudster gets hold of the money, usually the funds are further layered through the financial system, so money laundered, and it's usually not recoverable. And 96% of authorized push payment fraud payments are made through the faster payment system. Why is this a problem? Faster payments, as I mentioned, is instantaneous and irreversible. Irreversible meaning that once the victim or anyone has made a payment to a beneficiary account to the other party, the bank will not be able to reverse it. So once the payment is made, it's made. And also the transaction limit for faster payments have increased significantly. Initially, when it first launched in 2008, the maximum amount that you can send via faster payments via your online banking is £10,000. And now the maximum payment limit under the scheme is £1 million. There are a lot of victim blaming narratives. So because the victim in authorized push payment fraud technically authorized that payment through online banking, historically the bank's assertion had long been that victims need to get themselves educated on fraud risks, and they need to be taking some responsibility for the outcome. So there's an excessive focus on individual agency and allegations that where victims have lost money to authorized push payment fraud, they were somehow themselves negligent. It remains a serious issue. Although fraud volumes have decreased quite substantially, it still remains very, very high in terms of both the quantum of losses and the number of cases. You will see kind of a dip there between 2023 and 24, because from 2024, the banks are now required in most cases to reimburse victims up to £85,000. This is a separate sort of story that I'm happy to share more details on. But the banks had resisted government moves to establish a reimbursement scheme for a very long time, but eventually it did pass, and currently under in the UK, for payments that are made, domestic payments through faster payments and another system called CHAPS, victims are entitled to reimbursement, subject to some exceptions. So, as I mentioned, even though fraud volumes have decreased, the losses remain significant, and there are still a lot of debates between victim blameworthiness and institutional responsibility. So this idea that banks should be doing more. So this leads me to ask how we can look at authorized push payment fraud beyond just the action of individuals or organizations, but perhaps a greater focus on the broader structure within which individuals and organizations are situated. So I won't, I'm a relative novice to critical realism compared to everyone on this call. But of course, I have a lot of interest in it. But as we know, critical realism challenges us to look at phenomena through a stratified reality lens between empirical, actual, and the real. And social positioning theory, largely developed by Lawson and others at Cambridge University, is an extension of critical realism. It considers all forms of social organization which depends on processes of social positioning, and it really centers organizational structure. So the concept that people and things are relationally organized with each other in order to form totalities. And I think sort of in a way that is very much aligned to critical realism, um, it very much focuses on irreducibility, that we cannot reduce the totality to its elements, and organizations itself is an essential feature. So the components themselves have relational features that are not possessed by the items that are used, or the phenomena that are used in producing them. It differentiates, social positioning theory differentiates between person positions and object positions. And for each person position, the person who occupies that position has a unique package of rights and obligations, which means certain ways of acting. And for non-personal positions or object positions, they stipulate allowed uses. So the way that that object can be used by virtue of how they're positioned, utilized by any occupant of a person position. And each right or obligation contained in a package is matched to a specific obligation or right in a different package. And so there's a matching between rights and obligation pairs in order to form a community social relation. So for me, I think social positioning system, if I were to put it in my own words, it helps us investigate how generative mechanisms from the real actually manifest. And I see it as a scaffolding within CR. To bring this to life, I think perhaps we can look at an example. Let's say we have a house. A house may be made up of concrete and bricks and panes of glass and timber, but a house cannot be reduced to those things. So, as Lawson mentioned, if the bricks and blocks of wood and panes of glass used to make a particular house were randomly rearranged, it is very unlikely that the outcome would be or possess the familiar properties of a house. The specific organization matters, and organizing relations are part of the house. The house is more than the bare elements merely aggregated. So without, for example, an architectural plan of the house, without an understanding of what the materials are going to be used for, without the actual organizational blueprint on where to put the concrete and bricks and where to put the timber and the glass, we would not be able to build a house. And just taking this example slightly one step further, let's say instead of a house, we're looking at a cafe. The cafe is built is using the similar elements of bricks and wood and panes of glass, but instead of a house, we have a cafe. In a cafe, we've got a server serving drinks, and we have customers who are there to, enjoy enjoy a coffee. There are certain rights and obligations relating to both server and customer in this environment. So we may say, we may expect that the customer would have the right to stay in a safe and comfortable environment and to be offered food that is safe to consume. The customer may have obligation to say, only take up space at one table rather than 5 different tables, and to pay for the service before leaving. The server may have the right to direct where the customers are seated, and after the customers have ordered and enjoy their meals, to get paid. At the same time, the server may have obligations to accurately, convey what the customers have ordered and to provide the food that the customer has ordered. And what I find is interesting as we look at this extension of an example is that individuals who walk into a cafe largely already know what their rights and obligations are. And that's due to the individual's understanding of what environment they're entering into and the organization of that environment. These rights and obligations, however, are not reducible to the individuals themselves. They exist as part of the organizing structure of that particular environment. If we were to bring it back now to this question or problem and phenomena that is authorized push payment fraud, we can see that authorized push payment fraud itself and its connection to faster payments is actually part of a broader payment structure within the UK. This particular diagram is from KPMG back in 2014. And as you can see, there are different layers in terms of the UK payment environment, both in terms of how service users access their banking and to make and receive payments, but also requirements relating to how the industry governs itself, what are the different payment schemes that are in place, what infrastructure those payment schemes use, and how payments are settled. And in the highlighted area, faster payments back in 2014 was clearing about £771 billion per year as of 2014. By 2024, the latest year, it is now clearing £4.24 trillion for the year 2024. So it was reported in 2025. So it kind of led me to think both in terms of the growth of faster payments and its very strong relationship to authorized push payment fraud. 96%, if you recall, of authorized push payment frauds are cleared through the faster payment system. So the growth in faster payments is in a very significant way have been attributable to the entrance of fintechs as competitors to traditional banks. Many of you may be familiar with brands such as Revolut and Monzo and Starling. So these are all new entrants to the UK retail banking world, which challenges, kind of the quote unquote more stale traditional banks that we're familiar with on the high street. And fintech's ability to capture market share has, in a very significant way, been encouraged by the UK government policy to encourage competition in UK retail banking. It originated from the Cruikshank report back in the early 2000s, which eventually led to the development of faster payments. But what I think may be quite interesting to look at is, at the moment, fintechs themselves many of them don't have banking licenses. And so their ability to offer faster payments to consumers need to rely on traditional banks, which have direct access to faster payments. And these traditional banks also have accounts with the Bank of England to facilitate the gross settlement of faster payment transactions. And this is called an agency banking relationship. So the traditional banks is essentially providing a service to the fintechs in order to allow them to offer faster payment services to UK consumers. So the key research questions for me are, to what extent have competition objectives expanded the range of market providers for faster payments? How do rights and obligations differ in respect of faster payment settlements between fintechs and traditional banks? And how may differentiations in these packages of rights and obligations be conceived potentially as generative mechanisms to criminogenic risks in authorized push payment fraud? If I were to visualize it, it would probably look something like this. So on the right-hand side, we have the stratified reality that is largely the critical realism model. But kind of to the left of that are where I think social positioning theory can potentially assist in helping understand the packages of rights and obligations. So at the very top, you have legitimate users as well as fraudsters who gain access to the financial system, either via traditional banks or new market entrants. The fintechs. The fintechs have a relationship with the traditional banks via agency agreements. So the traditional banks provide a service for the fintechs in order to assist them in providing faster payment services to UK consumers. And the traditional banks also have settlement agreements with the Bank of England. And at the very low level, sort of at the very bottom, we also have government policy pressures relating to increasing competition and increasing consumption. So and those were some of, I think, the relevant drivers in the expansion of the provision of faster payments and online banking that we see today. And so I think it can be very useful to look at the packages of rights and obligations, through looking at the faster payment scheme rules, the authorized push payment fraud reimbursement rules, the agency banking models, interbank settlement and real-time gross settlement relationships between the different parties. And that is sort of largely the overall conceptualization of how I think a critical realist framework and a social positioning theory scaffolding can apply to what is largely both a criminology problem, but also a problem of economics and financial services. So as just some final remarks, I'm a student of philosophy. I actually is part of a philosophy reading group that is focused on phenomenology, and there are some ontological commitments that I have that I think not necessarily conflict with critical realism, but definitely encourages more critical thinking around some of the limitations, whether or not people and objects are atomistic, or are they actually often entangled? And I think there are consequences relating to how we conceptualize, given that if we are looking at the world and the objects within it as not necessarily independent of each other, but are in many cases entangled, then I think that suggests some limitations to the way we perceive and the way we are able to clearly differentiate under the social positioning theory framework to look at what are person positions versus non-person positions. And I tend to think that it's not as simple as that, that there are many cases of potential entanglements of an individual to other structures or objects that are linked to other objects that can be problematic in the way we may be able to make certain claims on generative mechanisms. So I think I will stop there. I appreciate maybe quite a dense topic, but and this is only really a brief sketch. So I will stop there and open it up for questions and comments.
Okay, thank you very much, Jane. So, I mean, perhaps while people are gathering their thoughts, I've got a question. I mean, one of the attractions of critical realism to me is precisely that it doesn't see subject-object relations as atomistic, but as relational. And now there are differences within the critical realist tradition of thinking about that. We had in an earlier presentation in the seminar series, Dave Eldevas, very kind of renowned figure in critical realism, putting forward, I think, along the continuum between objectivism and constructionism, a far more constructionist take, if you like, on that. Whereas we also had a presentation from Andrew Sayer, who I've found personally very, very helpful. Access to this intellectual tradition, who thinks, if you like, about the real powers and liabilities which make things possible in terms of their substantive rather than formal relations, their substantive relations of connection rather than their formal relations of similarity and difference. And that being a kind of key distinction between critical realist, or as opposed to what's sometimes regarded as naive realist or positivist ways of thinking about relations, that they are substantive rather than formal. And the substantive relations of connection then in turn often distinguished in terms of their necessary and contingent relations. And I've always regarded that as a sort of pretty much an anchor of thinking about this. So what necessarily has to be the case, but nonetheless is contingently filtered to be the case in actual cases. So I don't know if that's at all begins to help you deal with some of the issues that you finished off your presentation there, the entanglements, that we might clarify that by saying, yes, some of these entanglements, these relations between people and objects, which make something like authorized push payment fraud possible, yeah, in certain contexts. Could be understood in terms of those relations which necessarily have to be present for those to occur. Yeah, the rule, and they might prefer the rules and obligations and their formalization. The fact, for example, that the fintech, the new entrants in the market, where a lot of these faster payments are getting accelerated, nonetheless are dependent upon the traditional banks for access to that. Strikes me as a kind of necessary relation, yeah, essential to enabling the problem to occur. But why is it then that it doesn't, that it is limited in certain instances? Yeah, that only occurs amongst certain types of relatively more or less vulnerable victims, to come back to the start of your presentation, like pensioners, yeah, or people with, who there's certain things about them which in the victimology literature would make them as flags, so Ken Pease always made a distinction between flag and booster counts of people who are repeatedly or multiply victimized, or social groups that are repeatedly or multiply victimized. I mean, the classic example when he was first writing was of the ethnic minority shopkeeper on an ethnic dominant housing estate who because of their virtue of who they are, then are a flag in terms of them attracting sort of racial abuse or harassment, as part of the process, for example. Is there something about pensioners or the sort of especially vulnerable groups then which are which would also begin to help explain the pattern and the causation of push payment fraud in amongst particular social groups like pensioners, but not all pensioners, and so on and so forth. So I don't know if how far you'd got with thinking about entanglement yourself, and whether or not that more kind of Sayer end of the CR tradition distinguishing between what is necessarily the case and what is contingently the case. Bearing in
Mm,
mind then that contingent relations can nonetheless be central to the causal explanation of why something actually happened or
yeah.
was empirically observed in any one particular instance.
Yeah, indeed. And I think the sort of focus on fintechs and the way fintechs provide access to faster payments and to consumers, and also how fintechs themselves are able to, access faster payments as a service via an agency agreement with traditional banks. That's not necessarily necessary to say that most of the faster payments related authorized push payment frauds are all, being facilitated by fintechs. Traditional banks themselves have been, involved in processing authorized push payment fraud payments. But I think um, there are certain features around fintechs that are in some ways very different, qualitatively different to how a traditional bank operates, and this may sort of give some indication on the contingency point, and which is that fintechs are subject to a slightly different type of commercial pressure. So they are um, they are usually hugely incentivized to scale their business very quickly. And by scaling their business, I mean onboarding as many customers as possible very, very quickly. In order for some of the smaller fintechs, in order for them to be subject to an investment or buyout, or for larger fintechs and more mature fintechs to be able to IPO. Um, and that I think is quite different qualitatively to traditional banking models. And so it's not, I think it's quite right to think of not only, packages of rights and obligations in the way that I've set out. It's not as simple as that. Even within the fintechs themselves and within traditional banks themselves, in the way they operate, they are themselves subject to their own sets of rights and obligations and also commercial incentives in terms of how they behave. So yeah, and that goes, further on this question of entanglement as well, that these boundaries that we seek to draw in the way we conceptualize matters are not always as clearly defined in the way that we think, and there are definitely limitations to the conceptualization question, not least a presentational question to try to, I guess, clarify and 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 simplify what can be quite a complex matter.
Just before I kind of open it up to others as well, I mean, and to help me get a sense of where you're, how far you progressed with your studies now. Are you thinking about taking particular case studies of push payment fraud, or what's the research design where you want to try and empirically ground, if you like, your study of what is necessarily and or contingently the case enabling certain push payment frauds to occur?
Yeah, in terms of the design of the research design and potential kind of data collection for this part of the work, I'm thinking of and this is still developing. I'm thinking that there's actually quite a lot of information out there already available. To actually, if we're evaluating the packages of rights and obligations in terms of agency banking agreements, there's already information that can be evaluated on the rights and obligations in terms of the agency banking provider versus the agency banking customer, in this case, the fintechs. And also there are in payment systems is the operation of both laws and regulations as well as technology. So that's also an area of interest. So for example, if we look at irreversibility of payments, that's largely also driven by the fact that because I question myself, why did we create a payment system under which payments themselves are not reversible? Because if a fraudulent payment has been made, one would assume it would be in the interest of the consumer that the payment can be reversed and the funds released from the bank account and returned to the customer. But actually, there's regulatory directives out there that enforces the final settlement of payments, and that's largely to ensure financial stability and market stability. So I think there's an interaction between kind of the micro level needs and potential fraud protections versus the broader policy objectives to maintain stability in the financial system. So I think I'm only just starting. This is provisionally one of three papers in the PhD, and the conceptualization and also the research design linked to this piece is still being developed.
You'll
But
think it through. That's okay.
yeah.
I've got loads of questions. I thought it was really stimulating presentation. Thanks, but
Thank you.
I'll shut up for the moment and let other people get a word in. Anybody else?
I was going to ask a question, if that's all right.
Please, Simon, come in. Yeah.
Yeah, second Adam on that. That was very, very interesting. And I was just curious about looking at things from the perspective of the offending groups themselves. I know maybe that's not exactly what your research will focus on, but I was just wondering, is there much known about how they form, how they develop, what sort of mechanisms might be involved in actually creating these quite skilled groups of offenders and fraudsters? And whether there are any preventative ways of intervening in that area as well as the sort of actual technical system and the victims, just to flip the perspective away from the victims, what do we know about the offenders really?
Yeah, so that is not a focus of my research, but it is an important component nonetheless in terms of our understanding of vulnerabilities in that allows authorized push payment fraud to perpetuate. There's now more and more data being gathered on the vectors through which the offenders are able to reach out to victims and to actually perpetuate their frauds. And a lot of these vectors actually originate from their use of social media through telecommunications networks. So many of us would have received SMS scams. So, for example, you may get a text to say you've missed a delivery, and click on this link to rearrange your delivery for a different date, and then they will ask for certain personal information pertaining to you. So there is both a level of sophistication behind it. So in some of the telecommunications related scams, there are what are called SIM farms behind them. So organized crime, actually generating masses and masses of these SMS, hoping that someone will click on the link and provide information, etc. And also, I think the offender's ability to open bank accounts and then move on very quickly is also something that has been widely noted. There was, as I mentioned, that the government is taking more action on this. So they've actually compelled the banks and the fintechs to provide data on the authorized push payment scams that they facilitate over a period of time, and one of the fintechs actually was highlighted as being an outlier in terms of having onboarded as a customer quite a number of fraudsters, and the individual concerned, the director concerned of that fintech, eventually had to step down. So no, I've not looked specifically in terms of offender organization, on authorized push payment fraud, but I think they comprise both kind of organized crime with a high level of sophistication, as well as individual fraudsters who, operate on their own.
Can I come in there, Adam?
Yeah, please,
Is that
Nick.
okay? Yeah, I feel a bit naughty because I'm Jane's supervisor, so maybe I shouldn't ask her questions. And I prefer, I'm more keen to hear what other people's thoughts are on the PhD. But actually, tonight was one of the first times that I've seen Jane speak about social positioning theory. It's not something we've discussed yet in depth. It's been more around critical realism and phenomenology, I would say, and perhaps the ontology of money and the infrastructure that exists around that. So it was really good to hear that, Jane, and just to echo Adam and Simon, it's really, really good, provocative, thought-provoking presentation. So thanks. I'm looking forward to chatting about this more. But I guess my question, thinking in terms of the focus on fraud and deviance, deception and whatnot, and this idea of rights and obligations that you referred to, I just wondered, and perhaps this relates to the issue of entanglement that you mentioned as well in the last slide. And that is how do we go about disentangling the different motivations or expectations that people have in different environments? You gave the example of the coffee shop or the cafe where people expect certain things, but they're obliged to sit at their own table and I guess behave in a civilized manner and whatnot. But there are other reasons why people go in coffee shops as well. It might be to abuse the system, so they might be going in there to make use of the electricity and buy one coffee in 4 hours just to work from home, if you like. So I guess my question is about how people push the boundaries of what is permissible within those rights and obligations, and how does that relate to the issue of fraud, and how do we disentangle the overlaps that might exist around rights and obligations in different spaces? Does that make sense?
Yeah, it's a big question. I'm not sure I would have a ready answer to that. But I suppose one aspect that I have been thinking about in putting this presentation together is, and it is also, it may be related to entanglement, but it may also be related to matching rights and obligations, is perhaps, and I need to do more conceptualization work on this, is it the absence of matching rights and obligations that may potentially be a generative mechanism for criminogenic risks? So if I were to, go back to the agency banking example, I think an area that I think I'm driving at is that are the fintechs themselves particularly criminogenic because the sets of matching rights and obligations that apply to them are quite differentiated by the sets of rights and obligations that pertain to traditional banks, who have an obligation in terms of a broader infrastructure obligation. So meaning that they themselves have a direct obligation to maintaining stability within the UK financial system in a way that the fintechs don't have. So is it a conceptualization question of what exactly the fintechs are doing, or is it actually what I should be looking to do is to differentiate and notice and note where matching rights and obligations are actually unequal? And therefore, is it that unequalness that is criminogenic, rather than considering matching rights and obligations are always the same, which I don't think that they are. So yeah, I'm not sure if that directly addresses your question, but I don't know. I don't know if entanglement can be disentangled neatly. It may be a question of acknowledging entanglements, that there are limitations, as I mentioned, to the way that we're able to clearly conceptualize what we're talking about within stable boundaries.
I mean, I wonder if on that point, and again, just to sort of clarify, sort out the usefulness of different concepts for disentangling, as opposed to best explaining the possibilities for authorized push payment fraud. What are your sense of rival theoretical perspectives and existing work in the field? I mean, the impact of rational choice theory, for example, which I think certainly from my colleague here at Cardiff, Mike Levy, is popularized within the broader field of study of fraud. But I know that and other theoretical perspectives. I mean, how would you differentiate your use of social positioning theory from, the more established intellectual positions in the field on fraud, and what might tell us about the conditions of possibility for push payment fraud?
Yeah, that's a good way of thinking about it. Yeah. I think rational choice to me is for me it doesn't provide the level of explanatory power, especially if we're looking at the rational choice at an individual level. So it and rational choice theorists would argue that the victim should be appraising themselves of the kind of information that's out there in order to make a choice, relating to whether or not they pay a certain person or not. But I'm not sure it sufficiently takes account of structure and the structural mechanisms that are fraud enabling. So rational choice can't really explain, for example, the mechanisms in which payments move, and the payments moving quickly in a way that is irretrievable. Rational choice can't quite explain the way a bank may onboard a customer or also a fraudster, and why they do that at a large scale. So I think that may be a useful way of differentiating the usefulness of critical realism and social positioning theory in being able to allow us to dive deeper into the structural mechanisms within going beyond the individual choice within a perfect information environment.
And I just wonder whether that existing literature would lead you to think about the conditions of possibility of different sorts of push payment fraud. You reference to pensioners and their savings, for example, mortgage fraud and such like, and so on. Do these have different structures to them? Might that kind of influence your research design? If you want to go through different types of push payment fraud.
Thank you, Adam.
Well, it's an open question.
On the victim side, I think I've actually the research focus has not been on the victim side, although I have previously done research on the victims. The way that they may choose to make a payment usually are oftentimes subject to different circumstances. So for pensioners, often it's really to find a safe place to put their money that offers them, a healthy but conservative return on investment. The lady, the example we looked at, the lady who managed to make a payment to a fraudster, she was under pressure to send money, for exchange and completion on a house. And then there will be other examples where it will be an individual, purchasing an item from someone whom they think is a reputable merchant, but turned out not to be. So there are actually a lot of different examples under which people would fall victim to authorized push payment fraud. But for me, that still doesn't quite explain the losses that they suffer. So taking the example of someone buying something online, if that person were to purchase something via credit card and it turned out to be a scam, or they received or they never managed to receive the item, they will be subject to credit card protections. Whereas in authorized push payment fraud, before the changes of reimbursement rules that came in last year, they would just need to suffer the loss. So that's why I keep going back to the questions around structure, payment structures, regulatory structures that govern how payments can be legitimately made and received, and the obligations that are beholden on the institutions that facilitate those payments. Yeah, so I'm not sure if that answers your question.
And do you have a sense then of the sort of acts of omission as well as commission in the regulatory framework for faster payments? That were they to be altered, in ways of not only because of your own personal experience in the banking sector, but as a thought experiment, of course, another important technique of critical realism, a thought experiment of what can be put in place to significantly reduce the vulnerability for certain types of push payment fraud, be it the defrauding of elderly pensioners or people buying houses, or so on and so forth.
Yeah, I was just thinking about that myself, Adam, in terms of a thought experiment about what could happen to reduce the levels of APP fraud, right? And I guess the obvious one is to make faster payments reversible. But obviously the knock-on effect then is, I was thinking, well, that massively undermines your trust in the system, doesn't it?
Exactly.
In the sense that if you're being paid for something, and excuse me, there's always a risk that that money is at some point reversed and withdrawn back in the direction that it came from, then people will lose trust quite drastically in the system. So that's got that kind of macro level financial integrity concern, hasn't it? So it's not as easy as reversing or making payments reversible unless there's good reason for that. But would something like that, have an effect in dealing with the specific, say, scripts of the fraud, if you like? So if we remove that easy payment process and then the ability of criminals to move money very quickly on the back of that, how would that have a knock-on effect, do you think?
Yeah, I think the point around reversibility is an important one, because of the potential consequences to financial stability, and that is why there's been EU directive that has been implemented on the finality of settlement. So for faster payments, the participants in faster payments essentially operates what is called a deferred net settlement process. So the banks between themselves, I think about 3 times a day, they match each other's obligations to each other. So it ends up with a net amount. And it is that net amount that each organization either is in credit or in debit that eventually gets cleared at the Bank of England by the banks that hold a settlement account in central bank money. So at a gross settlement level, and as well as a deferred net settlement level, the payment finality kicks in, and by extension, payment finality also kicks in at the individual level when we're making and receiving faster payments, because otherwise the banks wouldn't be able to net settle with each other, and they therefore can't gross settle at the Bank of England. So there are, and that's why, in kind of that diagram I made, there are those policy reasons at the very bottom that have certain, generative mechanisms to the way that the payment works in our day-to-day interaction, in the way we experience when we make or receive a payment, that once we make it or receive it, it's not reversible. So there are other things actually, just on, what are some of the things that can be done. Some of the things have already been done. One very obvious one in sort of being able to combat and mitigate risks in authorized push payment fraud that had been put in place a few years ago is matching the name of the account holder with the sort code and account number that you're making a payment to. And so at the moment, many of you, may when you go on your online banking and you're paying a new person, you put in their details and the bank tells you whether or not it's a match to the name of the payee. That was not in place, until maybe 3 or 4 years ago. And fraudsters relied on that as a vulnerability to get victims to make payment to, let's say, HSBC when it is not HSBC, but through the identification of that vulnerability, some technology was put in, so that really reduced the number of misdirected payments in authorized push payment fraud. But I think the broader point is any potential solution are in many ways always subject to certain system constraints. So those constraints can be something like financial stability. Those constraints can be a technological constraint, or the constraint can be actually we introduce friction in the payment journey, and which actually is an objective that the government is actually a government objective, because the government wants money to move very quickly, because that increases consumption, which then increases GDP, et cetera, et cetera. So there are a lot of policy reasons and economic objectives that are baked into the way payment systems behave.
I mean, just on that, using that example of the setting up new recipients through traditional banking online, that invariably comes with multi-factor authentication as well. So you get called back to your own mobile phone and given a code. And
yeah, that's another security feature.
That which strikes me as really, quite a significant tightening up of the prospects for being defrauded. So perhaps another way of retroducing, if you like, what's necessarily and contingently the case for push payment frauds to continue happening is that why isn't that happening in others, or is it happening, but how does that get subverted? Because it's one thing, isn't it, just to I suppose be given a fake destination, yeah, but another thing then to if you think there might be a way of setting up multi-factor authentication to get around that. I don't know if that's part and parcel of the debate, or other layers of regulation, if you like, which can triangulate and so, for example, the point you raised earlier about a woman who thought she was in contact with her solicitor to send the mortgage payment. You would have thought a sort of a follow-up telephone call, which could be a matter of moments, not too, wouldn't slow down the payment that much, if you like.
Yeah.
But with the actual solicitors, I don't know. Just is that, and why isn't that sort of thing happening? What does that tell you, if you like, about the possibilities for the fraud to continue, or the limitations, if you like, of the existing regulatory framework?
Yeah. There. I think speed is such a central feature to all this. I think I go back to the original comment. Faster payments was largely driven by the UK government, because the government really wanted to increase speed in the payment journey. And faster payments was developed as a result of a government review, and very much pushed by the government. And part of the design of faster payments was relating to sort code and account number matching for a very long time without, so it's using existing architecture that already have those vulnerabilities, and on top of it, there's a policy requirement to make payments very quickly, which then compounds also those criminogenic risks. I just wonder, sometimes I think, maybe we should slow down payments somewhat, introduce certain friction in the payment journey where that friction actually achieves certain security objectives. But it remains a question of what types of payment characteristics would we want to identify to apply friction in the payment journey.
To think back to the structure, as you started, it was both the issue of the irreversibility, and Nick was just raising some queries about that, but also the instantaneous nature of it, really, and the demand for that. So it's not just fast, but it's instantaneous. That's the problem, isn't it? And what's the argument then around curtailing the instantaneous nature of online financial services in the service of a greater modicum of security? So, okay, it might not be instantaneous, but it's like a couple of minutes, surely. With mortgage payment of hundreds of thousands of pounds, you would have thought, would be worth it.
Yeah, I do wonder how, whether a lot of these more technical solutions are kind of missing the point, in the sense that, with fraud, they involve very convincing deceptions. So people, you could ask them 10 times or give them a day, and they still think it was a legitimate payment that they were going to make to somebody to purchase something, right? And that's the point, isn't it? They're just very good fraudsters, and it's sometimes very difficult to identify when you are being defrauded, because nobody makes a payment to a fraudster intentionally, do they? They all think they're doing something legitimate. So it's kind of dealing. So all these technological solutions are great, I guess, in making people stop and think sometimes about whether or not they are paying someone legit or not. But I wonder what effect they actually have on potential frauds and the levels of potential victimization. It'd be interesting to find that out.
Especially romance fraud, which is hugely convincing, and no amount of really slowing down payments. When someone's really convinced that they're in love with somebody, who's on the other side of the world that they've never met before, and the banks find that to be very, very difficult when someone is so convinced that it's not a scam when it is. Sorry, Daniela.
Yeah.
You have a question?
I enjoy listening to your responses, but I may be asking something that's maybe not within the scope of your research, but I couldn't help but wonder if you have any idea about how you can disentangle the structure versus agency kind of intertwinement on the part of the fraudsters, because the sheer level of sophistication of the push payment frauds is just impressive. And I'm saying that from the perspective of someone who was called by a scammer, that was maybe 5 years ago, who was trying to convince me to move all of my money in a safe account because my current account has and I was impressed. Well, I didn't I didn't do it, of course, but I was impressed by the level of detail that and the extent to which they went to try and convince potential victims, about the credibility and the authenticity of being someone from the bank. They were not only had access to all of my details, and they were reading back to me all of my personal information. So made a call. The number that was appearing on my phone was the number on the back of my bank card. So
they can they have technology to do that. So that you think you're actually talking to your bank.
That's why I'm wondering how they must have access to information in a way that a regular person doesn't have. That's clear. But if you have any thoughts on how you might disentangle that.
Not in terms of my direct research, but maybe more from my professional experience. And the banks will tell you this, because the banks themselves were, obviously not very supportive of having to pay reimbursement to victims as part of this. But they were very much arguing that they are not the only institutions within the ecosystem that is facilitating fraudulent payments or fraudulent attacks by fraudsters. So they are very much of the mind that social media companies, as well as telecommunications companies, which largely provided vectors for fraudsters to contact victims, to come into contact with victims, or for fraudsters to get hold of personal information relating to victims. It may not be in your case. It sounded like in your case, if they know so much details about you, there may have been a data leak somewhere historically that allowed a fraudster to obtain your information. But for some victims who are, for example, very active on social media, they may be disclosing information on social media, or they are having direct contacts with fraudsters on social media, answering ads on social media, buying products on social media that they've not checked. The banks are very much, of the view that that is quite unfair, and it's a view that I kind of subscribe to, that it's quite unfair that Facebook and Google are allowing fraudulent ads to be posted on their networks and earning a fee, a marketing fee for placing these ads, and yet they do not have to contribute to any reimbursement that would be due to a victim. So yeah, although kind of the fraud vectors are not directly kind of my area of research, and not particularly related to fraudsters anyway, but I do think that the banks get a lot of attention because that's technically how the payments move, and it's quite right that they have to take some responsibility. But there's definitely a lot more in terms of how frauds actually happen than plainly through a transaction via a bank account. And it also goes back to the question of entanglements, right? So we are entangled beings. We have bank accounts, but we also have social lives. And in our social lives, we have family members and they have bank accounts, but in our social life, we access lots of different places, lots of different individuals, via a lot of different means. And the bank question, the question of the role of the banks and the structure of payment networks is really just one aspect of the relevant factors which allow authorized push payment fraud to perpetuate. And I've not even added the additional dimension, which is an authorized push payment fraud that is linked to an international payment. So currently the reimbursement scheme, the protections, only apply to UK domestic payments. So if a victim makes a payment to a fraudster, which is a bank account overseas, there is no reimbursement there's no offer of protection to the victim.
Yeah, thanks for that. I was going to say social media is one of the big, I suppose, explanatory kind of mechanisms that enable fraudsters and such. And maybe research more in this area will lead to some, initiatives to push more responsibility onto these companies. But I think we're maybe a bit far from that. Hopefully not.
Yeah, I've not been following it that closely, but that was one of the objectives of the Online Safety Act. But I don't think it actually went as far as it could in terms of holding social media companies accountable for not only just authorized push payment fraud, but for other stuff like extremism, cyber stalking, and so on and so forth. I think it only moved the dial slightly, but not in a fundamental way in terms of putting social media companies in the frame.
Just in terms of thinking about the stratified reality, real, actual, the empirical, in terms of push payment frauds. If we start at the other end, at the empirical, what are your thoughts about how you might empirically register the actuality of push payment fraud, different types of push payment fraud. I mean, do you, in terms of your initial thoughts about your sampling, are you going to try and talk to some actual fraudsters, and how would you go about recruiting them? Again, I mean, in digital, analog times, you know, of the long firm fraudsters that Mike Levy used to look at. Some interesting techniques about how you challenges of interviewing fraudsters in the wild, as it were, as opposed to the challenges of interviewing those who've been successfully prosecuted, incarcerated for this, you know. But I mean, have you thought about, you know, retroducing the necessary and contingent relations of different types of push payment fraud by exploring and interviewing the accounts of the fraudsters?
Yeah, no. The direct answer to that question is no. Not part of this element of the project or the overall project. So this particular element, I'm keen to focus on the structural relationships between banking institutions and the provision of faster payments, and faster payments being a major factor in the transfer of authorized push payment fraud payments. There is a lot of other academic work focusing on fraudsters, as well as industry work that may be interesting as sources of information for me to challenge myself in the way I evaluate kind of the structural banking relationships. But yeah, not directly in terms of empirical evidence from fraudsters, sort of testimony, etc. I am doing, it's a separate paper, which I'm facing some challenges in data collection, which is looking at how individuals like me within banking institutions actually adjudicate this idea of victims' liability when it comes to authorized push payment fraud. Because as I mentioned, this idea of victim blaming narratives as to why a victim will behave in a certain manner, whether a victim had been grossly negligent, and so on, or it's a, you know, it's quite important in the way banks consider whether or not they would reimburse the victims. So I'm particularly interested in kind of how compliance officers see their roles during this period of regulatory change, but also the entanglements of those roles as well. So I know, you know, working in a regulated environment, you know, I have certain professional interest, which is to support the organization and the commercial objectives of the organization. But at the same time, I'm also a user of payment systems. I myself, I'm also vulnerable to fraud. My family, my elderly parents, they are themselves very, very vulnerable to fraud. So I'm very interested in, and this is a more phenomenological study on, you know, what are the potential conflicts and alignments in the adjudication of blame in authorized push payment fraud when, you know, a compliance officer working with a bank actually, in many ways, actually occupy different types of person positions, both as a professional and as a private individual. So that is more the empirical side of the work.
Yeah, and wouldn't answering that, you know, imply some sense of the possibility of how the fraud in question could have happened, and then precisely in order to adjudicate whether or not the victim could have possibly avoided it.
Yeah, that potentially, yeah. The victim could have avoided, because I think I often struggle between two poles, is how much a victim should have been aware versus the sophistication of the fraud itself. So at what level of standard do we hold the victim in being able to detect a fraud in order to not fall victim to a fraud? There's one that's definitely part of it, But another part that I don't think is often talked about, and it's not perhaps not directly a research question that I'm exploring at the moment, and it goes back to the institutional responsibility side, is that in order for a person to fall victim to a fraud and to make payment to a fraudster, it requires a bank to have onboarded the fraudster as a customer. So it requires an account to exist both on the victim side as well as the fraudster side. And the latter point relates more broadly to this particular study, which is the behavior of the fintechs in terms of how fintechs are onboarding their customers, how they're also incentivized to onboard many customers within a very short time, usually remotely, and thereby introducing certain criminogenic risks relating to authorized push payment fraud in the payment system itself.
Lots to chew on there.
I know.
It's really thought-provoking. Anybody else who hasn't had an opportunity, I feel like I've dominated things a bit this evening. I'm sorry. It's an indication of how interested I am in the subject and as an illustration.
Thank you for
Mark,
everyone's comments.
you're on mute. If you wanted to come in.
Yeah, can you hear me now?
There we go. Yeah, there we go.
Yeah, I was just sort of thinking really very thought-provoking, and lots of stuff buzzing around. I kind of thinking like the obligations were reminding me from interpretive of Garfinkel's background expectancies. I don't know if you come across those, where you go to, we've all have these underlying mechanisms in the real where you expect certain things to happen. And from my kind of, I suppose, my policing background, I think from a victim's point of view, and remember dealing with fraud, an underlying mechanism would be trust. Have you considered how, from an interpretive standpoint, in that entanglement mess, you can unpick how trust is emergent for this whole thing to happen?
Not me particularly, but I think there are actually a lot of good work being done by Button and Cross on the victim side, and maybe not specifically on the question of trust, but definitely looking at the fraud piece very much from a victim's perspective. And as raised by Nick earlier in our earlier conversation, in many cases, in my experience professionally, victims in many cases weren't negligent. They were trusting people, and they're not even naive. The fraudsters are very, very convincing, especially in romance frauds. We're talking about individuals who are very lonely, who are looking for love and for companionship, and who manages, they thought, to find that online, and it's undoubtedly a relationship whereby that trust is built up over a very long period of time. But no, I don't want to belabor the point, but I have a lot of sympathy for victims. I think there are definitely victims out there who are not careful, who are not naturally suspicious, or who may be slightly gullible. But in a lot of very devastating cases that I've seen, either victims have been pressured, or they are actually in a very trusting relationship with the fraudster, and it will be very difficult for the victim to identify whether they are currently being victim of a fraud. And also, I think from a banking perspective, there sometimes may be a tendency for people working in banking and financial services who are obviously, very skillful and very knowledgeable about frauds to apply that standard to a normal person on the street who don't live and breathe this stuff. And I do feel, even though I've worked on the financial services side, I think some of that expectation is unfair. And actually a paper that I published earlier this year talks a lot about this delegation of the delegation of crime control responsibility from the state to the private sector, and then from the private sector to individual consumers. And it's under the guise of consumer education. So this idea that, well, so long as we launch as many consumer education campaigns, then the responsibility for fraud detection kind of falls away. It is the individuals who are themselves responsible for their own, protection against fraud, where that model is actually quite a substantial change when we look at, post-war, the state being sort of the guarantor of security, and then the evolution of that, from the state to the private sector, and from the private sector to individuals under, well, what Garland called the responsibilization agenda. But that's a very roundabout way of saying, actually, no, I've not looked at trust specifically, but I think institutions have to take more responsibility, and the structures that we establish have to take more responsibility than the evaluation of kind of what the victims are doing. Which is nevertheless interesting as well, and understanding the trust component, but kind of my focus is largely on the structures.
Thank you.
Okay. Did anybody else have a question for Jane? If not, but well, thanks ever so much, Jane, for that. It was very. I mean, I do hope you come back and talk to us again as your project progresses further. But it would be great to see how you work some of these things out and apply some of the ideas we've been talking about this evening.
Thank you very much. Thank you for your comments and questions.
Always a pleasure. And yeah, I mean, at whatever level people's thinking, it's an open forum, So I hope some of the ideas have been useful for you anyway.
Absolutely.